as an investor, this got to be a no-brainer for us right here. We talk about a company that has a strong moat. What does that mean if they have a strong moat? That means it's hard for companies to replicate what they're doing. And they stand, as an entrepreneur, they stand in their wheelhouse. All right, man, listen, if you're an entrepreneur, you need to own this stock, right? If you're an entrepreneur, one thing you're gonna do is get your accountant right, get your email marketing right, make sure your credit good, and you gotta file your taxes, baby. That's right, man. Today we're gonna talk about a stock that has a strong moat, right? It has a 95% retention rate with its consumers. It also has a recurring revenue model that is insane. That's right. But also it is one of the #1 DIY tax providers in the world. It's the #1 in America, yo. Done deal. You need to check this company out, man. So listen, before we get into this company, I promise you, you're gonna love this video, man. Make sure you like, make sure you subscribe, and make sure you share this with somebody, man. Somebody you know won't get some money. You know what I'm saying? Also, man, let's make sure we know this. That's not me in the chat telling you to go to WhatsApp. That's not me in the chat telling you to go to Telegram. That's not me in the chat saying, yeah, Miss Lisa made me. Ain't nobody made me no money but me. You know what I'm saying? So that ain't me. Miss Lisa, Bob, Breck, whoever these people is they naming, none of them, I don't know them people, man. They fake. You feel me? So don't fall for that in the chat, man. So before we get into it, I want to put that out there, man, because don't text me, email me, DM me saying, Trap, you took my, I'm like, bro, that ain't me. I don't know Miss Lisa. So listen, man, before we get into it, man, listen, I love y'all. Without y'all, there is no me. Today, we're going to talk about a company called Intuit, ticker symbol INTU. Listen, the stock is down barely. The stock is down this year. It's up over 40% in 1 year, and it's up over 200+% in 5 years. That is insane. The company has a strong balance sheet. And I'm looking at the balance sheet, man. This company has over $2.4 billion sitting in cash. That's up 65% from last year where they had $1.4 billion in cash. Listen, bringing revenue to $15 billion and they have a 25% operating margin. This company is strong. All right, we go a little further. Watch this. The company has a 95% of the company's revenue comes from subscription-based, is a subscription-based model. If you're an entrepreneur, you know one thing. You want that subscription. Why? Because people keep paying. But you got to provide an immense amount of value for people to stay on it. Watch this. Not only do they have not only does 95% of their revenue come from subscription, it means it's predictable, it's sticky, but watch this. They have a 92% retention rate. That means that people staying. You know what that's from? QuickBooks. Watch this. Over 70% of the people who use their recurring revenue models use other services. Meaning, not only do you use QuickBooks, but you know y'all entrepreneurs in the beginning, you don't want to get no CPA, so you doing it, what? TurboTax. More than half of the users that use QuickBooks also use MailChimp, because you're not using ActiveCampaign. You're not using Go High Level. You're using MailChimp. So the MailChimp, they got you from MailChimp, which is the top 3 email providers in the game. QuickBooks, watch this, is the backbone of small businesses and medium businesses. TurboTax is the #1 DIY tax service, but this is the one that's gonna kill you. Credit Karma. Credit Karma has 130 million users, but guess what you didn't know they had? Mint, the money management thing. Listen. Intuit. Now, the stock is trading at about $600, but that's okay. You're an entrepreneur. Guess what? When you invest in Intuit, you also get paid off other entrepreneurs because they use it. So here's what I want you to do. Here's what I want you to think in your mind. You're okay as an entrepreneur with using QuickBooks, but you're not okay as an entrepreneur to own QuickBooks. Hello, somebody. Right? When you talk about this company, right? When you're talking about being able to own a company that now think about this now for a second. You want to think about this. Small businesses and medium-sized businesses are the backbone of America. So what does that mean? That also means that like cybersecurity companies, when small business, I literally got 3 QuickBook accounts. I need, yeah. When you get QuickBooks, you're not gonna leave them because all your data there, and they've made itself. But also, watch this. They're now integrating a high-level AI software, an all-in-one ecosystem, and an AI data play. They also added the AI agents, which means they got the agents that help you navigate the system, but also navigate your small business, give you suggestions how you can become more profitable as a small business. How do you need to cut systems and tools? Listen, they need to give me an advertisement budget for this, because I'm just breaking this coming on. This is just insane. Watch this. The company also pays, watch this, a small dividend of 0.67%. They got a 0.67% yield. Watch this, that equates to $4.16. $4.16, which means you get about $1.04 a quarter per dividend. Watch this. The payout ratio is 36%, which tells us this. It tells us that they got money to raise the dividend. Okay, let's make that make sense. 36% of all the profit they make comes in the form of a dividend. So here's how we know that. Like for me, I like companies that's under 60%. You feel me? So that means at 36%, plus they got $2.4 billion in cash on hand. That means they got bread, and we know that the $2.4 billion cash on hand is up from the $1.6 billion, which means to us, they growing that bread. They growing that bread, they sitting on that bread. They paying us out to the dividend, they investing in the AI. Come on, y'all. Come on, y'all. So if you're gonna look for this company, some of its competitors, maybe a company like SoFi, that may be in that area. You're talking about fintech, you're talking about PayPal in the fintech space, but not really them. Services and software. So when you think about fintech, you're thinking about PayPal, you're thinking about Intuit, you're thinking about SoFi. Come on. As an investor, this got to be a no-brainer for us right here. We talk about a company that has a strong moat. What does that mean if they have a strong moat? That means it's hard for companies to replicate what they're doing. And they stand, as an entrepreneur, they stand in their wheelhouse. But they're going a little further because the management team has done a great job at driving costs down. They've done a great job at taking a lot of debt off the table. Listen, the company has little debt on the balance sheet. Here's what we understand. A company with little debt cannot do what? Go broke. And with the operating margin, listen, and with the operating margins at 25%, they are doing a really good job at operating this business. The company did pull back a little bit early in the year with everything that was going on, but it's down barely. It's down barely. It's not even down 2% right now. It's up 40% year over year, meaning the same time last year to now, and it's up over 250% in the last 5 years. I mean, it's giving you about 35, 40% a year, bare minimum. Come on, y'all. This is a no-brainer right here for us. That's what I mean. Like, one of the things I want to start doing is like highlighting stocks that we don't even much be thinking about. Now, here's one of the dope things I do in my groups and Trappers Anonymous. We give a whole breakdown on it. And then in the Patreon, what I do is give price points too. So if you want to join it, we learn how to build a portfolio out, come join Trappers Anonymous. We do a class every Sunday. You want to learn how to just get price points doing that, come join the Patreon. Listen, you need to be here because that's what we're doing. So our stock for the day, man, is none other than Intuit, ticker symbol INTU. This stock is a phenomenon. It has a strong moat, has a great balance sheet, it has great management. It's definitely a 8 out of 10 on my list. It's an 8 out, I'm gonna give it an 8.5 out of 10 on my list to own in your portfolio. Yeah, man. Tell me in the comments how you like this chat, how you like this story, you like this content. Tell me if you like how we mapped it out. Let me know if you would like other content like this. It's your boy, the Wall Street Trapper, man. I love y'all. Salute. I see y'all in the trap, man.